Miss Joyce Chan is our AVP Head of Customer Support and one of our top investing trainers. And since 2010, she has spoken to thousands and thousands of Filipinos on how to invest in the stock market. She has over a decade of experience in the financial industry and is a certified securities representative, certified investment solicitor, a fellow in the Life Management Institute with honors, and a certified UITF salesperson. Please give a warm round of applause to Miss Joyce Chan.
Hello, good morning, everyone. Hey. Good morning. Okay, thank you for being here today. So I'll be talking about dividend investing with you today. But before I get into that, I'd like to ask a question. So you see here, there's a tree with a lot of fruits on it. Now, what I want to ask is, what strategy would you apply to get those fruits, to harvest those fruits? Okay, so let's do a little exercise. Okay, with a show of hands, who among you thought of getting a ladder to climb that tree to get that fruit? Yan. Can I see? Okay, there's a couple there. Hey, who naman thought of maybe making a long stick with a net at the end to get that fruit? Can you raise your hand? Okay, there's also a lot. Now, who among you thought of getting a rock and hitting the fruit for it to fall down? Yeah? Okay, mas wala. Okay, baka mas old-fashioned yung ganong klaseng approach. How about, having a machine naman, trying to get that fruit? Yan. Any machine. It can be a machine that can reach up to get that fruit. Meron ba? Nakaisip ng ganon? Okay. And then, the more important question is, who among you thought of more than one strategy to get that fruit? Can you raise your hand, please? Okay. Thank you. And I'm very happy to see there's a lot of hands that had thought of more than one strategy. And the reason for that is because investing in the stock market, there is really more than one strategy. There are two ways to earn in the stock market. One of them is through price appreciation, and the second is dividend. Okay. So here, I will be focused on the dividend part. And for me, dividend investing is sort of like you having a basket under that fruit tree, waiting for that fruit to drop. Okay? So here, there is more than one strategy, and I'll be talking about dividend investing. Okay. So what exactly is dividend investing? Dividend investing is when you choose a stock that actually gives out dividends. So dividends are extra earnings that the company have that they like to give to their shareholder. Hey, so this is a sample dividend calendar here, wherein I show you there's like 3 different kinds of stock there. What type of dividend they give out? There are different kinds, but the most common is cash. And I believe that's also the one that we like the most. Okay? And then there is also 3 dates here. Okay, what I'd like to emphasize is the ex-dividend date. Okay, so this one I always like to emphasize is that please have the shares the day before the ex-dividend date. So think of it like an expiry date, like an expiry on a loaf of bread. Okay? We don't eat it on the day or the day after the expiry, we eat it before. Okay? Now, why is this very important? Why do I always emphasize this? It's because in customer support, I would always get clients who would call and ask, saan na ba yung dividendo ko? Bakit hindi pa nakakredit sa COL account ko? And for me to find out that they would buy it on the ex-dividend date itself. And that's very hard to tell the client na sorry po, expired na yung dividend. Okay? So please have it the day before at least for you to be eligible to get that dividend. Now, why is dividend investing a strategy? This is what you can do. In your portfolio, since there are 2 ways to earn, you can have investments that are for price appreciation. You can have investments just for dividend investing. And the one in the middle is what I like most, is that when you buy something that can deliver both. A potential for a price appreciation, but at the same time, while you're waiting for that, it will give you dividends. Okay. So what should we consider when we're doing dividend investing? Why should we consider it? Why not just go purely to price appreciation, where that's the primary focus when it comes to investing in the stock market? It is because it's that when markets are tough, and I do know that you feel it now, that when markets are tough, dividends are there to help you see it through. Now, so this is a sample of a stock. And sometimes a stock would move like that. Diba? Very volatile, up and down, sometimes sideways. But while you're waiting for this stock to go higher, you can actually collect the dividends that they would give out in between. As you can see, this company actually gives out 2 times in a year. So while you're waiting for that company to go up, we can be rewarded for our time and patience. Okay, now, who else uses dividend investing? Who else does this? So in dividend investing, even professional fund managers do this as well. You would have these different types of funds, and they would focus on buying assets that give out dividends. There are some local fund managers, even international ones that does it. Okay? So dividend investing is really a way for us to really go through tough times and at the same time take advantage of companies who are rewarding us by being their shareholders. Okay, so now what are the risks? Like everything in the stock market, there are risks. With dividends, there are 2 risks here. One is when the company can opt not to give out dividends. They'd like to keep that capital within themselves so that they can actually use it to expand or to grow that company. Or the company can also cut down their dividend rate to offer smaller, especially when they're not performing as good as they would want to. Okay, so these are the risks. Now, knowing this risk, it's very important to choose the tree that we stand under. Okay. Now, if we are going to choose, here are some options for us to consider that I think are very good when it comes to dividend investing. Here, I'll be talking about REITs, your real estate investment trust, and the second are preferred shares. Okay. So preferred share is not as popular as REITs, but I would like to discuss both because both have their advantages and can really help you in your portfolio when it comes to dividends. Let's start with REITs. So how are REITs made? Okay. So first, there are real estate companies who would gather their assets and put it in a REIT company. Now, they will register with the PSE and offer that now to investors. The good thing about this is that when you're buying REITs, you're actually participating in the real estate assets that they have put in. Okay. One of the criteria also for assets that they can put into REITs is that those assets should be or performing well in the last 3 years. They have recurring income, especially rental income, so that they can pay that out to their shareholders. So this is how REITs work for investors. When rental income comes into these companies, so the real estate companies, what they do is that, by law, they are mandated to give out at least 90% of their net income to shareholders as dividends. So this is at least. There are some REIT companies who would go higher than that, 95% even, just to give that payout to shareholders. Okay, so what are our top picks when it comes to REITs? Okay, and this is also in line with the report that our research comes out with, which is the REIT snapshot. Okay, so if you have time, please take a look at that report because it would show all the REITs that are available in the market and their top picks as well and why. Now, these 3 top picks would be your A-REIT, your C-REIT, and your RCR. Now, just to give you a background of these, if you have not invested in these yet or have not heard of them, A-REIT has a sponsoring company from Ayala Land, so it has assets inside it from Ayala Land. Now, different types of assets inside it. They have office, they have retail, they have industrial. That's the good thing about this. This is quite diversified. Okay? Its expected dividend per share for the year is around 2 pesos and 4 cents, with an estimate dividend yield if at the price of June 1, 2023, so if you're going to buy it at June 1, your dividend yield for the year is around 6.06%. Okay. So that's not bad. That's actually quite good. Now, we have another one here, CREIT. Now, CREIT has a REIT sponsor of CityCore Renewable Energy. The good thing about renewable energy, these are solar plants, solar power. So they lease those land for them to make solar power. They will be estimated to give a dividend per share this year, around 19 cents per share. That is equivalent to about 7.25% dividend yield. And then for RCR, this is from Robinson's Land. We're in mostly office office real estate inside it, with a dividend share in 2023 of 39 cents for the year, giving you an estimate dividend yield of about 6.87% for the year. Okay. So the good thing about this is that you can add these stocks into your portfolio and get these dividends so that it can help you through these times we're waiting for our other investments to go up and where we can earn through price appreciation. Yan. Now, what to consider when you're going to buy a REIT? There are a couple more that I did not mention, that these are just the top picks. Now, what to consider? One, we always look at the dividend yield. Are they worth the time for you to invest in them? Now, are they worth waiting for? And are they actually good in today's market? Second, will they be putting in new assets into it? Will they be growing? Okay, so here, these are potential, or these are some of the lands that they have not even put into the REIT company yet. So these are your potential to grow. For a REIT, you have more than 750,000 square meters that they can still add in. And what I like about a REIT is that they keep on adding. They've already added a couple of assets in the last few years so that it would make their REIT more valuable and their dividend actually grows over time. For C-REIT, they still have 33 hectares of land or project that they're thinking of injecting in. And for RCR, 180 square meters. Still, they have yet to inject into this REIT. So these are your potential for growth. We're not saying that they will, but these are the potential for them to put in, because they do still have a lot of assets they have yet to inject. Now, the third to consider is a reputable company. Okay? So like my colleague said, we stick to the leaders. And the leaders, you can see here, you would have your Ayala Land, your CityCore Renewable Energy, and your Robinson's Land. Now, why is that very important? With reputable companies, for me, they tend to be stronger when it comes to tough times. And they tend to actually have a good performance over the years. That's how they made their reputation. So here, why should we consider REITs? Why is it actually quite nice to have this option? They are required to give out 90% of their net income as dividends. It's also an affordable way to partake in real estate investments. Diba? I do know buying a condo now can be millions of pesos that we sometimes may not have in our budget. But here, we can already participate with a few thousand pesos. And lastly, it has a potential for price appreciation. So remember the diagram I made, wherein in your portfolio, you can have 3 types. This is a good one because it's in the middle. It would have both, a price appreciation over time and dividends as well. There. Now, let's talk about the preferred shares. You know, preferred shares is not as popular, but I still like it. Now, why? With preferred shares kasi, this is when a company would need capital and they would issue preferred shares. When they issue preferred shares, they list that with the PSE and you can actually trade it in the stock market with your COL account. How do they work? With preferred shares, they would give you actually a fixed rate of dividends in return for borrowing your money. What I like about it is that it's a hybrid of a fixed income and a stock. You would have the best of both. Fixed income because they would tell you that they will give you a dividend rate of about 6% every year. But then, why is it like a stock? Because you can trade it anytime, no holding period, so that whenever you need the funds, you can sell it in the market. So, they give out dividends to shareholders, and there's actually two types. You have one, a perpetual one, wherein it will stay there in the market for years and years and still give out dividends to whoever has it. Or there's a callable one. A callable is when the company would buy it back from its shareholders, usually at the issuance price. So for example, if this company would issue a preferred shares at 1,000 pesos per share, they would say that after certain years, for example, for 5 years, we have an option to buy it back from you at 1,000 pesos per share as well. So what is your reward for holding on to that for 5 years? It is the dividends that they will give out in between. So some preferred shares to consider, and I kind of got the ones that are from reputable companies. So you have your ACPAR. This is actually quite new. It's just offered this year, wherein it is by the Ayala Corporation. It's cumulative and it's callable in 5 years, meaning 5 years from now, they'll buy it back at the issuance price. They said that they will give out a dividend yield of about 6.2341% for every year. Okay. Now, we also have another one that they have before, which is ACPB1. This is a Series 1 preferred share. It's also cumulative. The difference is this is perpetual, meaning it's there. They don't have a date when they will call it back. However, the dividend that you can earn, if you were to buy it around the June 1 price, it's around 5.3681%. And then finally, we have here GT Capital, which is GTPPB. Okay? So you can actually type this quote in your COL account and it will come out. There's a bid and ask, you can trade it. This is cumulative and it's callable in 7 years, but they have a way wherein we can call it anytime in October of this year onwards. However, there's a chance that they can be called later on to about 2026. Now why? It is because when there's a callable option in a preferred share and they don't buy it back from you at the issuance price, they usually reprice that dividend to make it higher. Okay? So that's the good thing about it. If they don't buy it back from you at the issuance price of when they will say it, then there's usually a reprice in the dividend yield. Yan. So for this one, that's why this one has a callable time of around 2023 all the way to 2026, because the step up or the repricing of the dividend will happen in 2026. Okay. So here, what do we now consider when we're buying preferred shares? Again, dividend yield. That's very important to us because we are buying it for the dividend itself. Second, it's the liquidity or the callable date. Can this be bought or sold in the market? And will they be calling on this stock anytime soon? And then finally, what are your risks? Now, what do I mean when I say cumulative? Cumulative would mean that if they're not able to give you the dividend that is due today, one day in the future, when they will, they have to pay all the years or all the quarters they have not paid a dividend out to you. Yan ang ibig sabihin ng cumulative. Meaning, I cannot pay you now, but later on, I should pay all of that. Okay, so we like that. That really lessens your risk in terms of them not giving you the dividends. And second, repeatable companies. We like this. Ayala Corp, GT Cap. These are the companies that we know that pays out their liabilities. So that is why here in preferred share, your risk for receiving that dividend is very, very high in chance. So the risk is a bit lower. Okay, so why should we consider preferred share? One, it's a hybrid of fixed income and stock. So if you're gonna put them on a spectrum, if fixed income is on one side and stock is on the other, okay, preferred share will be near here to the fixed income, then next would be REITs, then it would be common shares. Here. Now, flexibility in liquidation, meaning should you ever need the funds, you can trade it like a stock if you like it, no holding period, so there's no fee involved if you're going to hold it only for a short amount of time. And finally, there is an ability for capital preservation because, especially for the callable type. For the callable, if you buy it at 1,000, 5 years from now, they'll buy it back from you at 1,000. You have preserved at least your capital. Here. So that is the biggest difference between REITs. Okay. So see, REITs has a potential for price appreciation. Preferred shares now has potential for capital preservation. But both would give you dividends. Now, just a little bit of a summary. When you're adding dividend-paying investment, it will definitely help you while you're waiting for that price appreciation to happen. And that is why dividend investing is something that we can inject into our current portfolio. You have two options here, actually more than two options. You still have common shares as an option as well. But here I have discussed REITs and preferred shares as well. And then for REITs, don't forget to consider the yields, the growth, and the reputation of that company. And then for preferred shares, consider also the yields, the liquidity, and the risk. Here. Now, I would like now to share with you a little bit of my own investing journey. Now, when I was asked to talk about dividend investing, I really thought about it and looked into my own portfolio and saw how I did my own investment journey coming into this. I remember before, and with Charles, I actually came in during the bull market, 2010. Came in when everything was going high, and then price appreciation was the main focus of my investing. But then, I would come to years wherein it might get lean. I also come to years wherein I can make a mistake. And when I do, I realize that my mistakes can be quite costly. But what had saved me are the dividends that I was receiving on the side that I didn't really pay attention to when I was starting out. For them, dividends was like, extra lang yan, okay lang yan, but that's not my main focus. I was focusing so much on running after the price appreciation. But then, when price appreciation was tough, when it was hard, it was the dividends that was saving me. I remember, I bought this stock. Okay, this stock was actually, I was buying it around 2,200 pesos, 2,300 pesos. I think you might have an idea what this stock is based on the price. Okay, so when I was buying this stock, I was actually waiting for it to really go up. But then, after a few weeks, that stock was going down. It went down to 2,000, went down to 1,900, and me, anong mafe-feel nyo pag nangyayari yun sa stock na hawak nyo? Down 10%. Ma'am, parang ang sakit. Kakabahan ka talaga. And that's what happened to me. Kinabahan talaga ako. I put my hard-earned savings into that stock, but then it was going down. What do I do? So here, what I did was that I took a look at it and really evaluated. Did I really wanted this stock? Was I in it for the long run? And I said that I really liked it. I really think it has a lot of potential. I'm a customer of it. And I think that it will go up. But then, how long was I willing to stay? Then, the first dividend came in. It was pretty good, actually. When it first came in, I said, uy, mukhang kaya ko pa tong hintayin. Then, the next dividend came in again. And then I said, uy, mas kaya ko pa tong hintayin. When it started to come in, I was there thinking that I can extend my patience a little longer. I can wait it out. Because I was being rewarded for being patient and staying with them. And true enough, there was a news that came out. There was a catalyst about one of their products. that started to make this company shoot up. Naging 2,200 na siya at my buying price. So sabi ko, uy, pwede na. So sabi ko, sandali lang. Umakyat ng 2,500. Saya na ako. Up na ako, di ba? Nag 2,700 na. If you're in my position, would you sell? Parang hindi kayo sigurado, ah. Ha? Pwede na, masaya na tayo di ba? May dividend tayo while waiting, may price appreciation pa. Pero syempre, umabot pa siya ng 3,000. Di ba? But, the moral of that story was that I was willing to wait. I was willing to wait, and while I was waiting, hindi na niya ako iniwan. Binibigyan pa rin niya ako ng dividend. And that's when I realized that dividend can really cushion the blow. It's for the patient investor. It's for those who was willing to wait for the company to grow. Yan. Huwag na natin sabihin yung company. Alam niyo naman na po, di ba? Okay. But that was when I realized that dividend investing should be part of my portfolio. Wherein it shouldn't be just something that's nice to have. It should be something that I am consciously have put into my portfolio so that during these times wherein there's no interest in the market, diba, I'm still getting that dividend. And I can use that cash to either buy new ones, be ready for when the times come wherein it will be a bull market again, or it can even do some cost averaging for me. Or in our case, pwede rin natin siya i-withdraw at i-gasto sa 6/6 sale, di ba? Yes, but, yeah, it's also nice to actually put some of it back in, cost average those that we are still holding on to. Now, I also wanted to show you this. I'm also one of the lucky few that actually bought into a REIT when it went on an IPO at about 27 pesos per share. At that time, I allocated around 100,000 for it. So with the board lot, I was able to get 3,700 shares of a REIT, and it cost me about 99,900. Tinipid pa ako ng 100 talaga, no, sa board lot. But I was able to get this, and when I took a look at my portfolio, I made this Excel for everyone, just to see that how much dividend does a stock can actually give you. With a REIT, it went on an IPO in August 2020. First dividend it came out was December, so talagang pamasko, pinakauna. And then after that, it would consistently give out dividends every quarter. In 2021 nga, they didn't wait for December anymore. They gave it out in October, which is actually quite good. So in 2020, all the way till now, I still have my A-REIT. And then I took a look of how much dividend I was able to get from it. In 2020, with the first dividend, I was able to get about 1,132 pesos. 2021, I was able to get 5,000 pesos. 2022, when they were slowly increasing that dividend per share because they were already injecting assets into REIT, it became 6,400. And now, with that beginning of the year, I already have 1,007 and waiting for 3 more payouts for the year. So here, with dividend investing, this can definitely help us in terms of our portfolio while we wait for the bull to come. Okay, so that I hope that whatever I impart on you would also help you in your own investing journey. Thank you.
Thank you very much, Joyce. May I invite you to quickly sit down for a few questions and also questions from the audience. Nakakatuwa no na all of the speakers have their own investing stories to share. The goal really here is for everyone eventually to be able to have and share their own investing story. So sige, I'll start with a few questions for Joyce, but I encourage everyone again to key in their questions on Slido or even try to ask Miss Joyce questions here. We have a few mics here in the center aisle. Please feel free to approach the mics. We really like to meet some of you, hear your voices. Okay. So, Joyce, you talked about REITs. I was wondering, because it was also raised earlier in the previous talks, that in a high interest rate environment, property is challenged. The property sector is challenged. How does that affect our view on REITs?
Okay. So with properties, it definitely affected when interest rates was going up. Actually, the REIT prices went down at that time. There were some wherein they were able to cut dividends, and it was a challenging time for the property sector. But that's the reason why I would also like to say that please consider REITs that have more diversified assets into it. I do know in the property sector, they are facing a challenging time now. But again, this is cyclical. But for now, the times when it's tough for the properties, I like the REITs that are diversified, like a REIT, diba? It has more than just office into it. They have the retail into it. They have the industrial lots that they had put in. Then you also have your C REIT that focuses on renewable energy. And when interest was high, it did not affect that because with renewable energy, as long as our demand for that energy is coming in, the lessors of C REIT are able to pay their obligations. So diversifying those assets, REITs with diversified assets is really good. But I also think it's a cycle for the real estate. I still think they're very valuable, and one day it will come back. There's still value in real estate, and I think it always will.
Thank you for that. So basically, in every challenge, no, there really is always opportunity. You just really have to learn it, study about it, stay informed.
Yes, and the good thing about that was that when the price of these REITs actually went down, when the interest rates went up, it actually offset, because when you were buying them at a lower price, your dividend yield actually becomes higher. Diba? So I think that's the reason why markets are efficient, like Charles said. That when it goes down to a certain point, because the dividend yield is already quite attractive, people come back in to buy them. So that's what makes them stable. So it offsets, right?
Thank you, Ms. Joyce. Between preferred shares and REITs, how do we distinguish them? Especially for new investors only starting to get into dividend paying instruments, right? Is it a one or other kind of thing? Do you have to choose one and that would already be sufficient for your portfolio, or can you have both?
I think it depends on the budget. With preferred shares, I find that you have to have a little bit of more budget to buy into it because of their price. However, you can definitely have both. What I like about preferred is that it's stable. Walang gulatan sa kanya. They would pay out your dividends, then they will buy it back from you at a later time. I like the stability of it. But I don't focus all my money on it because your REITs have potential for capital appreciation, which your preferred shares don't have. So for me, a little portion of my money is in preferred, but I like the REITs more because it has that price appreciation and that dividend side of it. So I kind of have both. So you can actually do more than one. Okay? So I think that's why REITs are also more popular because it's more exciting, diba? It's like a stock. But then I think people don't give the attention preferred shares deserve. Honestly, I have a lot of valued clients. They like preferred shares so much. Okay? I have lots of valued clients wherein gustong-gusto nila yung, sana yung dividendo ko, di ba? Na, I'm expecting my dividend to come in, di ba? Is it already there? They like that stability of it, the thing that they always get. So they sometimes don't like the risk that REITs sometimes have. But for the younger ones naman, I find them that they like the REIT so much because sabihin nila na, aakyat to, pwede to umakyat, pwede pa sila maglagay ng assets into it. So it's a bit more exciting. But definitely, two is a good option. Diba? More than one strategy is always good. Okay? Just have to complement each other. Don't put all your money in just one.
And as you mentioned, there are also ways to also diversify with REITs, right?
Oh, yeah. So it definitely, you pick something that feels right for you, di ba? If you like the more, the one that has capital appreciation, then go with REITs. If you like the stability of that recurring dividend that comes in, then preferred shares is the way to go.
Very helpful, Joyce. Thank you. All right, we'll get to Slido questions, but please, we would really like to hear some of your voices. No question is too easy to answer. We really encourage. We want to hear what everyone's thinking.
Yeah,
Okay.
Promise, we don't bite.
Si Joyce pa ba? Narinig niyo naman po kung paano siya magsalita, di ba? All right, so let's start with the Slido question. What is a more dependable source of dividends, REITs or common stocks?
Okay, a more dependable source. Between the two, I would say REITs, because with REITs, they are, it is by law. They are required to give out 90% of their net income. For common shares, that's not the case. For common shares, they can keep the capital with them if they need it, and they can actually give it out. So there's really no fixed or dependable dividend policies when it comes to common stocks because it depends on their company. But with common shares, the primary purpose is really price appreciation. With REITs, the primary purpose was for the dividend. So I think between the two, when it comes to dividend, more dependable, that would be the REITs.
REITs for dividends. From Lennon Vasquez, if I am right in my understanding, preferred shares seem to have similarity with bonds. If not, what are the differences?
Okay. Actually, because it's a hybrid of fixed income and stocks, it's very much like a bond. Sa totoo lang, it's a sort of like a different way of packaging. But with preferred share, I think the most difference between a bond would be affordability and convenience. They work the same way. They borrow money, they give you back a coupon or a dividend or an interest rate back to you. But the difference is, one, convenience. I like that preferred shares, you don't have holding periods. You can buy and sell it anytime online. You don't have to go to any branch or any physical store to do it. And then also for its affordability. If you want to have good rates kasi with bonds, sometimes you have to have a bigger capital. While for preferred share, since it's already in the PSE, it's quite efficient. You just have to buy within the board lots. There. So for me, preferred shares are more affordable in terms of you kind of need less capital to get into it, but both are very similar in the way they work.
In that case, Joyce, maybe preferred shares then would be more similar to bond funds.
Quite similar. Okay, quite similar, except of course, the bond funds have that diversity. While for preferred share, it's just that one company that you are investing in. That's the biggest difference between the bond fund and the preferred share.
All right.
Yes.
It's a very stark difference too, so thank you for pointing that out. From Dr. Alvin De Jesus, how easy is it to buy or sell preferred shares compared to a common stock?
Okay, it actually depends on the common stock and the preferred share. If we're talking about a common stock that is part of the PSE index, the big leaders, they are more liquid. There will be thousands of transactions for that common stock a day. But if we're talking about a stock that's rarely traded, then preferred shares may have a better liquidity compared to some stocks that are not being traded. But for preferred shares, the reason why they are never as liquid as the big common shares is because majority of the shareholders of preferred shares, they like it for the dividend. So they're in it for the long haul.
They really hold on to it.
Oh yeah. I seldom see active traders buying preferred share because it's not something you buy and sell. It's something that you buy and then you wait to get that dividend. So parang majority of the customers that I talk to who have preferred are those who are long-term investors. They're also the ones who are, they kind of like the ability of it being a fixed income. The ones that need that steady dividend payout that would come in.
Thank you. More questions on Slido? While waiting for more Slido questions, please. We'd really like to hear from people here. Sulitin naman natin yung punta natin dito. I mean, of course, you could have also asked just as well on Slido, right? But we really like to get to know who you are, why you're here. So please feel free. Maybe we can also try raising hands, if that helps. Just raise your hand. We have, oh, there you go. Thank you, sir. We'll get to your question very soon. Thank you. All right. So on Slido, just before Sir's question, while he's approached with the mic, from Lennon Vasquez, REITs are cheaper today due to high interest rates, as I know. If the interest rate starts to go down, it seems expected that price will start to rise. What can we expect then of its dividend yield?
Definitely, dividend yield will be affected if the dividend yield will not change, meaning the expected dividend for the year, if they will not change it, then the dividend yield will definitely go down as the price goes up. However, if these companies were to inject more assets into it, then the dividend yield can go up again. Yeah. So it actually depends on that REIT. However, again, REITs have that ability to grow compared to other investment instruments. Yes, but again, it will be affected. Kasi with interest rate, marami siyang tinatamaan, sa totoo lang. And tatamaan din niya talaga tong mga REITs and preferred shares. But markets are efficient, so the price would also change in such a way that the dividend yield would still be quite attractive in that market. Yeah.
Thank you, Ms. Joyce. I'm excited to hear from our audience member. Yes, sir.
Yeah, good morning.
Good morning, sir.
My question on the REITs, as part of your portfolio, for example, especially in this environment, while you're waiting for the bull market to start, how much percent allocation would you like to have your REITs as part of your portfolio?
Okay, thank you, sir. Usually,
Thank you, sir.
in this kind of market, wherein if tough markets like this, medyo mas malaki yung percent ko when it comes to REITs. Maybe around the 30 to 40%. That's for my own. Because how I do it is that when there is no stock that I'm going to go after in terms of price appreciation, I have a lot more budget to put into these REITs, to these preferred shares. So it's about mga around 20 to 30% is actually quite nice. At least it cushions me with the rest of my investment. But then when stock market starts to pick up, you can actually lessen that so that you have more of your funds that is focused on the price appreciation. But I think about 30 to 40 is good. If you wanted 50-50, pwede. But for me, more than 50 might be a bit too conservative, knowing that we are in this stage wherein we're waiting for something to happen. Yes.
Thank you, sir. We have another audience member. Yes.
Hi. Hello. I'm Lennon Vasquez, actually.
Oh.
I have one question na lang actually sa slide, but I want to ask it diretso na. So, in my question, kasi in our generation, REITs is actually very lucrative. May mga ibang gusto bilhin lahat ng REITs. Anyway, in my question, what are the red flags that a REIT company seems to be a dividend trap company?
Sorry, what are the red flags?
Kung may red flags lang po na baka dividend trap kasi may mga iba kasi when I doing my research kasi it's not mean na pag mataas ang dividend yield, it's
Yes.
a good company.
That's very
Okay.
true.
That's very true. Okay? So sometimes I don't just look at the dividend yield when I go into the company. That's why I always have these other criteria to take account of. For me, maybe some red flags when it comes to REITs would be if the asset inside it is very few or it's just centered to one or two buildings into it. I kind of like a more diversified portfolio for my REIT. And then, I also like it when things are accredited, yung mga PESA accredited, or diba, or part siya ng a certain accreditation, it had met all the requirements needed, I like that because it shows good governance of that company in their real estate assets. Others, my red flag, sometimes I also take a look at the mother company, the sponsoring company as well, because you cannot really take two and hihiwalayan mo sila totally, completely. No, because they're the one who's managing the real estate company. So I also take a look into that. I have to like the mother company as well. So taking those things into consideration, anything na kontra doon would be my red flags. Yan.
Thank you, sir. All right, we have now a question on Slido. What is your view on FILRT? Why is it heavily down compared to other REITs? From
Okay.
Gerald M.
I think the reason why FILRT is down is one, demand for offices is not as high as it used to be. And that's the reason why their dividend actually went down a little bit when they were paying that out. So I think because of that, the price of FILRT actually went down. But because of it going down, the dividend yield now of FILRT is actually now quite higher. Kasi diba? So when that price went down and they were still giving this dividend coming in, the dividend yield is now a bit higher. Now, for me, I think that's the real reason why FILRT went down. It's really because majority of the assets inside it are office buildings. And since office demands are quite low now because of the cycle in the market, they got hit. Okay? But, of course, they still are giving out their dividends. They have not missed out on a dividend payment. But with the new price, you should definitely buy it now at this new price so that at least na-offset siya with a better dividend yield compared to what it was before.
And as you mentioned, it's in a cycle now.
Yes, it's in a cycle. So for me, FILRT, they're still giving out the dividends. It's still okay. However, there are the top picks that you can consider should you want to rebalance.
Yes, your picks earlier
Yes.
from your decks. Yes, very helpful with the breakdown of how much, features, components. All right, next question on Slido.
Oh, ito.
Is it better to buy the REIT or the mother company? For example, A-REIT or ALI?
Oh, lagi tanong yan sa akin. Like, why would I buy A-REIT when there's ALI? Why would I buy FILREIT when there's FILINVEST? Di ba? That's always the question. And I think it depends on what you're after. If you're after the dividends, then you buy the A-REIT. But if you're after more on the price appreciation, you buy Ayala Land. Because that's the main focus Di ba? So if your main focus is price appreciation, Ayala Land. But of course, their dividend is not as big as what you're gonna get from an A-REIT. But if you're going after the dividend itself, A-REIT is a very, very good choice.
Again, depends on your priorities, your
Ay, oo.
goals.
The primary objective is quite important. Oo. I once had both actually into my account. And then, manonotice mo talaga yung difference. I was trading ALI because of its price appreciation. So that's all my consideration was Now when the price goes high, bebenta ko yan. With A-REIT, I was kind of thinking, wait, kailan ang dividend date nito? How much am I gonna get for that year? Was it worth still keeping my money there? Different questions and I treat them differently. Okay? Because of the primary reasons nga why I bought them. You can have both if you want. If you really like the Ayala Land companies, you can. However, for the price appreciation side, I would defer you to the stock picks of Charles a while ago, where he said that he kind of liked the consumer sector more.
For now, yes.
Yes.
Any more live questions maybe? Sige, ipon muna tayo for live. On Slido again, aside from liquidity, what would be the advantage of REITs or preferred shares versus Pag-Ibig MP2?
Okay. When you look at the dividend yield for both or the interest rate of both, diba, it's quite similar. But again, it all boils down to sometimes convenience, what's accessible to you, and also what's within your budget. Ako, I find it that there are also a lot of investment instruments out there that actually give out quite a good interest rate in return. 7%, 6%. Diba? Now we are spoiled for choice, and honesty. Now we have your digital banks, you have your e-wallets,
That's
you
right.
have all these that gives out interest rates, right? So we have a lot of options. It's really a matter of, I guess now it's convenience, diba? For you. And at the same time, it also, for me, how much is the minimum to get into it? And what are the fees? Okay, please always take a look at the fees. Okay? Huwag kayo madali sa mga hidden fees. Always ask for the fees. Okay? Because sometimes they might give you a high rate and then suddenly, oh, I have a fee here, 1%. I have a convenience fee for you. I got all these fees, diba? So that really cuts down on your dividend rate. So what I like to do is that I like to take a look at the net. How much net in dividend yield will I get after all the fees? For REITs and preferred shares, it's similar to common shares. If you are a Filipino citizen or a foreigner residing in the Philippines, your withholding tax is around 10%. But that's the withholding tax of whatever you get. While others, they may charge you for the full amount. Diba? 1%, 2%. Ganyan. Mas masakit yun. Even though it looks 10% withholding tax compared to 2% fee, but ask them, saan kinakalculate yung 2%? Sa dividend na makukuha mo or sa buong investment mo? Kung sa buo yan, malaki yan. Masakit yun. Diba? So always take a look at that. So for me, I'm not an expert in terms of fees for the Pag-Ibig. However, just take a look at that and also the convenience and how much you need to go into it. For me, even if you choose other investment that gives out dividend, that's okay. Diba? As long as there is that dividend coming to you. Yes.
The main
The main
point of
objective
this
naman talaga eh.
session naman po talaga
Yes.
is getting paid, getting rewarded while you wait for opportunities.
Yeah, but we're very lucky talaga. I've never seen so many options.
Right, that's so
Diba?
true.
We are now spoiled for options. And yun yung maganda ngayon, di ba? With technology, you are so spoiled with options. There's not even a problem of geographical restrictions. You can do it anywhere. So it's really a matter of just look into the fine print. For me, look at the fees, always. And then also take a look at how much you need to enter into it, and then convenience for you.
Those three pointers. Thank you. Any more who want to raise their hands?
Itong
For live
question sa Slido,
questions.
medyo mahirap-hirap to ah. What is your view on DDPR? Now, yes, why is this hard for me? Okay. The reason is because I have mixed feelings regarding this REIT. This is actually quite hard. Because for me, DDPR, when it came out, it did actually quite well during its IPO, but after that, okay, DDPR did not do as well in terms of its price movements. However, it does have one of the highest in terms of dividend yield. But the reason for the high dividend yield is again because of the lower price. For me, I'm not only just after the dividend yield. I also have to take a look at other factors as well. So even though it does have a very high dividend yield, I still am more cautious towards it because I do know that there is this decline in price that's making this dividend yield very high. So for me, consider the others. I like to consider the top picks first, okay, before going into this one. Okay.
All right. From Dr. Alvin De Jesus, is dividend stock investing a more appropriate approach to compound wealth?
Okay. For me, it's not just this one strategy. This has to complement your other strategy, which is more of the price appreciation. Because that is really the beauty of the stock market, wherein your primary way to earn is price appreciation. So this is more of like a supporting cast for you. So for me, take advantage of the primary reason first, which is price appreciation. This is supposed to cushion, to help you. It's a complementary strategy. I don't agree that this should be your only strategy or all of your money goes into this strategy. For me, it's not like that. This is a complementing one. Quite strong, but when the market starts performing quite well, you will really see the biggest difference there.
Especially with what we discussed about cycles. Parang it sounds like medyo malaking opportunity, but it will take time.
Oh, yeah.
So
this is like, di ba, habang naghihintay ka,
Yes.
di ba, you can park more of your investments here, but when that time comes, rebalance tayo. Di ba? And that's the beauty of the stock market eh. Siya lang yung may ganun talaga, that price appreciation eh.
but also maybe rebalance slowly, going slowly into equities. Kasi if you're not sure yet what the future holds, volatility may still be there, and so it's okay to still keep having dividend stocks,
Kanyang-kanyang pace.
dividend paying stocks.
Pero
in your portfolio.
what Charles says, do tranches of it. Hindi naman kailangan do or die tayo eh, di ba? Pwede dahan-dahan tayo, konti-konti. I find that strategy quite well. Actually, my boss is Mr. Juanes Barredo. He was the one who really taught me that it doesn't all have to be all or nothing. Pwede tayo dahan-dahan. So he taught me that when the market was going up, you don't have to sell all at the height because you don't know when the height is eh. You can slowly sell it over time while it's going up. Same then when it's going down. Di ba? Na kung bumababa siya and you don't actually know when that bottom will hit, you can do it slowly and over time.
Very good reminder.
Yes. I have a very good mentor. Yeah. Okay.
From
here.
Elvin, perpetual preferred shares means you can buy anytime and hold forever with capital preserved and fixed dividends. Are these always available at the market?
Okay, for perpetual, it's always there. However, for the capital preservation of perpetual is not as big of a, it's not as guaranteed, what I would say, compared to a callable one. Okay, kasi si perpetual, lagi siya nandyan eh. The company may not buy it back from you at the issuance price. So you might really have to sell it at the market price. But of course, market price doesn't really differ far from the issuance price kasi niya. Oo. So it's always available in the market. You just have to type in the code. If you are unsure of the code, take a look at the stock list in your COL account. You can even search for the word PREF, P-R-E-F, to find the preferred shares available for you there. That's my trick. Kasi sometimes sa haba ng listahan, hindi ko siya mahanap. So I always do a Control F and then type in PRF just for me to highlight all the preferred shares
To
in the stock
immediately
list.
be able to see. Okay.
Yes.
MREIT and FILRT are not among your top REIT picks. Do you see any weaknesses on these two versus your top picks from Vilma?
Okay, for me, MREIT and FILRT, it's really more of the assets inside it. They're also primarily focused on office space kasi. Now, that's the reason why I chose a REIT and C-REIT, and also I think because our research chose it, it's because of its diversified assets into it. So si MREIT and FILRT kasi more of office space sila, while A-REIT and C-REIT, renewable energy, and A-REIT has the retail and industrial to offset the office space. And that's really more of the primary reasons.
But eventually, just to add to this, Joyce, do you think there would be opportunity with MREIT and FILRT?
Oh, definitely. When, di ba, the property is a cycle eh. Di ba? Like
Going
my
back
mom
to
always
it
tells
being a
me,
cycle,
di ba?
yeah.
Di ba, real estate, it's always valuable, it's always there, it's finite, it's the thing that we really want to have. There's value in it eh. So I think it will come back. It's just like a matter of time when. So we can revisit them later on when markets in the real estate improves better. But for now, I like the more diversified ones.
On REITs, isn't it better to buy when the price is cheap or lower so as to have a higher yield? Yes, I was also thinking about that. Given your anecdote about the customer you helped, bibili na sana siya, pero it was the date already of distribution ng dividend.
That happens more than I like. Sa totoo lang.
When's a good time to buy a REIT or a preferred share in that case then?
For me, when it goes down kasi, sometimes, one of the famous expressions kasi is that don't catch a knife when it's falling. So, tama din na when Charles said, when something is going down, please try to figure out why first. If it's something temporary, then you can take advantage of that drop in price to buy that REIT. However, if it's something more permanent, we stay out of it. Okay? So, for me, sa totoo lang, REITs doesn't fall as much. The time na talagang bumaba lang siya is when interest rates was going up, then doon siya bumaba. And those are like only a few times. Mostly, REIT prices are quite steady. So, it's okay to buy it if it's only temporary yung problem. However, for me, just buy them slowly if you want to get into REITs. You can start slowly now, put in like 5,000 pesos at a time, dahan-dahan, okay? But please, rule is don't buy it on the X date, okay? Please buy it at least days before or have it at least the day before. Yan. Kasi napansin ko kasi pag may X date, a lot of people think it's the deadline. And ewan ko, sa culture natin, pag sinabi
Deadline to
natin
buy?
deadline, doon tayo bibili, di ba? Or doon tayo gagalaw. So here, which is not the case, have it the day before. Ayan. Okay? Isipin nyo na lang, expired na yung produkto sa X date. Expiry siya.
Expiry.
Yes. Oo, hindi siya deadline date.
All right. That was it. Are there any more questions from the audience? Wala na. Thank you so much to everyone who sent in their questions.